There's been a lot of news surrounding Medical Properties Trust recently, with two events going on with this company's stock. The first and still ongoing story involves a major short squeeze of MPW by users of WallStreetBets and followers of the online influencer Roaring Kitty. On Tuesday, this group of investors reappeared after a several-year hiatus and began buying aggressively into many of the most shorted stocks in the market. While this originally included just Gamestop and AMC, it also resulted in people buying other companies that have been heavily shorted, including Arbor Realty Trust and Medical Properties Trust. What happens is that these people intentionally buy heavily into the most shorted stocks in the market in order to trigger a short squeeze. If done successfully, it results in the share price of the stock soaring, and individuals and organizations that are shorting the stock experience significant losses. On Tuesday, the share price of MPW shot up by as much as 11% during the trading day, only for it to fall back down on Wednesday. As of the making of this video, it's still an ongoing battle, and it's unclear how things are going to end. MPW and ABR just aren't getting the same attention that GameStop and AMC are from these people. But I think it's unfortunate because despite this going on, there's another piece of news that came out last week that, without taking the WallStreetBet investors into consideration, makes MPW a better candidate as a long-term investment. So please don't mistake this as an attempt on my part to pump up MPW. I'm a long-term income investor and I've never supported any kind of day trading. Historically, MPW has always been one of my only speculative positions. For those who follow me, you'll know that I mostly hold boring investments that are known for paying high dividends and not so much growth. MPW is a higher risk holding that I think is deeply discounted enough to dedicate a small position towards. Not more than a few percentage points of someone's portfolio though. But the second and far most important story involves Steward Healthcare, MPW's largest tenant, declaring bankruptcy last week. It was a move that wasn't too surprising, as Steward has been under a lot of pressure for years because of the pandemic and poor management. On May 6th, the company released a statement regarding the restructuring of Steward Health, stating that they approved the funding of $75 million in debtor-in-possession financing. The financing was offered to ensure that there's no interruption of patient care while accelerating the process of transferring their hospitals to new operators. On the 9th, this company released their first quarter financial results, which were down because of the impairments from Steward Health. So let's go ahead and take a look at their reported FFO from their latest results, and I'll go into whether or not there's any potential risk for future dividend cuts, what Steward filing for bankruptcy is going to look like, and even if MPW themselves are at risk of going bankrupt, like I'm seeing some people online speculate. In the first quarter of 2024, MPW reported normalized funds from operation of 24 cents per share. This is down quite a bit from this time a year ago when the company reported 37 cents per share of NFFO. And a lot of people are concerned about this number, but there's something really important to keep in mind that I think some people might not be aware of. This normalized FFO of 24 cents per share does not include any rent from Steward's properties. That's because Steward finally had their chickens come home to roost with this Chapter 11 bankruptcy filing. So think about the implications here in terms of their dividend. Steward currently makes up almost 20% of MPW's property portfolio. Their dividend is currently at 15 cents per share per quarter. That means that even with Medical Properties Trust not collecting rent from 20% of their portfolio because of Steward, their dividend is still way more than fully covered. With normalized FFO of 24 cents per share and a 15 cent per share quarterly dividend, this currently gives their stock a payout ratio of just 62.5%. Unless this company is hit with what would have to be several tenants not being able to pay rent to MPW, the dividend should still be safe where it's at. Furthermore, with such a low payout ratio, this company is going to retain a lot of their earnings, which they can set aside to do a lot of other things with, like pay down rent or build up the cash on their balance sheet. So with that in mind, what's going to happen to the properties that Steward Healthcare is currently operating? Again, last week they filed for Chapter 11 bankruptcy, and it's important to know what this entails. What's going to happen is that Steward is going to have to go through a restructuring process. It'll take time for the courts to work this out, and it can go a lot of different ways. The court system might determine that Steward needs to exit all of their hospitals, or more likely, they'll lose just some of them and hold on to a limited number of them. It all depends on how many they can reasonably manage, which will be determined by the court system. For all of the properties that Steward will have to exit, Medical Properties Trust will be able to search for new tenants right away to take over their hospitals. This is going to be a really beneficial process because as soon as these properties are taken over by new tenants, then MPW will have more predictable rent, and I expect funds from operation will increase. Now, it's very possible, and I'd even say very likely, that when a new hospital manager takes over one of these properties, they'll likely enter into an agreement where they'll be paying MPW less than what Steward originally agreed to. But again, even if that does happen, it'll still result in increased funds from operations since they're actually paying the REIT what they're owed. And I'll also add here that medical properties are going to be even more diversified, because having 20% of your investments in one operator was very risky on their part, but that's going to change with more companies owning more of their hospitals. Another issue people have been concerned about with this company is their debt, but this is also something that the company has been making significant improvements on. Medical Properties has been in the process for a while of unloading some of their properties to cover the debt that they have and also take care of upcoming maturities. This is another area where I don't see the company having a serious issue in the foreseeable future. In their latest earnings, they announced they sold a 75% interest in 5 Utah hospitals operated by an affiliate of Common Spirit Health to an institutional asset manager, resulting in approximately $1.1 billion in total proceeds. So it's another thing that this company keeps seeing big improvements in. Despite all these positive developments though, their stock is still being heavily attacked by shorts. Since I last covered them, it has gone down a little bit, but today Fintel is still reporting a 37.82% short interest. And what you need to keep in mind is that, while there's people out there predicting doom and gloom for this company, it's possible that a lot of them are trying to benefit from shorting MPW themselves. The fact is, almost everything this company just reported is going to benefit this company as time goes on. So just to summarize all the reasons why I'm more optimistic about Medical Properties Trust going forward. First, Steward Health is finally going to give up some or all of their properties. These properties will either go to new tenants, or Medical Properties Trust might sell some of them, which can reduce their debt even further. Once these hospitals are transferred to new tenants, then MPW will start collecting rent on them, and that should result in increased FFO. I really do believe that as soon as this happens, their dividend will have an even wider margin of safety than it does right now. Second, no single tenant is likely to make up anywhere close to what Steward was, which is good for diversification. Hopefully no operator in the future will make up more than 5 or 10% of their portfolio. Finally, they've also been paying down debt, which was also a concern for them. Going forward, I think there's a couple risks that could play out. If another tenant were to come forward and announce that they're unable to pay rent, then it would likely cause the share price of MPW to fall pretty seriously again. I haven't seen or heard any news regarding if any of their other tenants are struggling to pay Medical Properties Trust, but it's always possible, and it's unlikely that we'd be able to predict this thing anyways. Interest rate risk is another issue, but that's the same for all REITs out there. Unfortunately, the Fed still haven't cut interest rates. I don't think we'll likely see rates get increased, but the longer that rates stay high, the more expensive floating rate debt is going to remain. If they have to refinance debt with interest rates still being high, then that's also going to eat into their profits. But again, this is true for all REITs and all corporations basically. So that's where I put this stock right now. But I do think their future is looking brighter going forward. The dividend appears completely safe for the remainder of the year and hopefully after that. According to the company, they do expect sizable earnings growth next year as the Steward Health situation should be fully resolved by then. It's been a long couple years for this company, but the future is looking brighter for them. Again, I consider MPW to be a higher risk holding, and no one should dedicate more than a few percentage points of their portfolio to them. Let me know your thoughts on this company, but with that being said, that's going to conclude today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.